समझ नहीं आ रहा अपने सैलरी इंक्रीमेंट का क्या करूं।
बेटा इतना क्या सोच रहा है? अपने म्यूचुअल फंड्स के एसआईपी का टॉप अप करा ले। दिस इज द राइट टाइम।
क्या? समझ में नहीं आया।
बेटा इतना क्या सोच रहा है? अपने म्यूचुअल फंड्स का एसआईपी टॉपअप करा ले। दिस इज द राइट टाइम।
अब समझा।
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
We are now looking at the return of a king of the resources, commodities, wealth market. Usually, the expression or adjective king is used, at least in normal usage, for coal. So it said King Coal is back or King Coal is in bad odor. But you know what? In resources, commodities, there is only one king, and that's gold. And if you had any doubts about that, over the past 4 years plus, since COVID began, gold has shown you that ultimately that is where the value lies, particularly when chips are down. Now, gold has been going up since COVID came. Gold has been going up. You can see this first chart that this is from World Gold Council, starting with 1970. After that, 1972, 73, Yom Kippur War comes, and the oil shock comes. That is when the gold standard for convertible currencies is given up. The gold has been rising. In fact, if you drew a line like this, it will almost be like gold has never gone down. There will be periods for maybe a few weeks, a few months even, when gold has gone down from the peak, but it comes back on. So consistently it goes up like a fixed deposit. A fixed deposit always goes up in nominal value. It may suffer in terms of inflation. Gold also goes up in nominal value. The question would always mean, when it comes to investing in gold, will it be able to beat inflation or not? And that would depend on whether inflation is high or low. That we will get into as we go ahead. So first of all, see what's happened to the price of gold over the past year. Past year, that means if you begin 1st of January 2024, 13 months since then, that is all of this January, and now coming into the third week of February. In this period, global gold prices have gone up from $2,045 per ounce, that is on 1st January 2024, to now about 2,900. One day it's 25 more, one day it's 25 less. So I'm just taking the round figure of $2,900. That would mean an increase in 13 months of 41.8%. Let's say 42% and round it off, because it has already crossed on some days 2,900, right? So this is a 42% increase on any asset class in just 13 months. Usually these things would be unprecedented in normal times. The reason I'm not going into details of gold prices in India, although you can see every day on your business channels in particular, also on the business pages of your newspapers, also any other websites that you track, that gold has been going up. The price of gold has been going up almost every day, and looks like the way it's going up, maybe it'll maybe it'll cross. I'm not predicting it. I'm saying maybe it will cross that one milestone of 1 lakh per 10 grams. We don't know, because gold is going up. The reason I'm not giving you granular details of gold prices in India is that in India, it's linked to many things. It's linked to the value of the rupee vis-a-vis the dollar. That has an influence. And second, also the Indian duty structure, because India has been charging duties, import duties, customs duties on gold imports, and these duties have varied over the years. I will come to that in a different context, but I'm not using the Indian prices for comparisons. I am only looking at global prices, because ultimately everything that happens to gold is underlying those prices, and those prices we get from World Gold Council. So see that what's happened between 1970 and now, and what's happened over the past year, that is beginning Jan 1 to now. This is how gold prices have gone up. And at the same time, people have moved to gold even by way of their savings assets. So even in India, there is a movement from mutual funds, from equity mutual funds, debt mutual funds to gold mutual funds. Now, this is something that wasn't very fashionable in India. But just this year, in the last couple of months, 6 new gold exchange traded futures ETFs or gold bonds have been added by Indian mutual fund companies, and there is a rapid increase of the number of people, of the number of savers, particularly high net worth individuals, who are moving their savings from other assets, mostly equity or maybe debt, into gold denominated exchange traded futures or bonds or mutual funds, if I may use that expression. And mutual funds, as you know, come with risks. So remember that warning. So January itself, Indians moved 37.5 billion rupees, which is equal to 435 million dollars into gold exchange traded futures, ETFs. These are funds that trade in gold futures. So basically, these track international gold prices. That is against an average last year of 9.4 billion rupees per month or $112 million every month. So this has gone up by more than four times in the month of January, because there is panic in the global markets and people are rushing to gold, which is our story for Cut the Clutter today. Why is this happening? Why are gold prices going up? Now, if you see at the same time, what has Reserve Bank of India been doing? Very, very important, because if there are smart investors, nobody can be smarter than Reserve Bank of India. Now, Reserve Bank of India doesn't play in the stock markets. Obviously they cannot, or they will not. In any case, they keep the country's reserves, but they then look at the big picture and see where those reserves should be parked. So generally, about 60% will be parked in the dollar, most of the rest in other tradable currencies, the euro, the pound, the Swiss franc, stuff like that, maybe Singapore dollar, but some is always kept in gold, because that is considered to be the more secure hedge. So Reserve Bank of India in January 2024 had 7.7% of all of its reserves gold. 7.7% of roughly ballpark, say $600 billion worth of reserves that RBI has. Today, it has gone up. In Feb 25, it has gone up to 11.3%. What this underlines is the massive gold purchases that RBI has been making. So over 2024, RBI has purchased 72 tons of gold. In fact, globally, central banks in 2024 purchased more than 1,000 tons of gold, and that was the third successive year that they purchased more than 1,000 tons of gold. So the champion, of course, is China, beginning 2022. That is until now. China has bought 316 tons of gold. You can see Chinese reserves, and accordingly, China's reserves held in US Treasury bills are coming down, because after the war in Ukraine, everybody got worried, because the Western world, the NATO alliance, they basically possessed Russian reserves lying in global securities. So those were possessed. After that, everybody got spooked, the Chinese most of all, because Chinese are the ones who are most likely to be at odds with the Western world. So they moved a lot of their reserves to gold. China has bought in this period 316 tons of gold. Turkey, surprising, 198 tons of gold. And since January 2022, RBI has bought 95 tons of gold. Now, we had featured this central bank flurry of gold buying in an earlier CTC as well, I think about 2.5 or 3 years ago, of which we'll share a link with you. But please see this graphic. This graphic will tell you, see, graphic on one side tells you net purchase every month of gold by RBI, and on the other side, it's plotting time. So it's showing you the month and how much purchase made. That amount tells you how the gold reserves with RBI are growing. And see how that graph is going. It's going up like this. At this point, Reserve Bank of India has 866 tons of gold. That is a very big change in India. And similarly, correspondingly, while it held 88.5% of its reserves in foreign exchange, now it's 85.2. Now, people who are rich are smart. I'm talking of Indians. Indians who are rich are smart. So the rich people or high net worth individuals who have money to save and who've been investing in mutual funds, real estate, whatever, you can see that they've also taken the cue from RBI, and they are also moving some of their assets into exchange traded futures. So I told you how the numbers had gone up. So this graphic tells you month on month how Indian high net worth individuals have been moving part of their savings into exchange traded futures, gold exchange traded futures. Currently, the estimate is that the amount of gold held by Indians and exchange traded futures is the equivalent of about 65 tons. Now, how do these exchange traded futures and gold bonds work? I was also wondering that somebody sells you exchange traded futures and effectively you buy gold, say at today's price, which is $2,900 or 88,000 rupees Indian price. Suppose it goes up tomorrow by 30%. If it goes up by 30%, who will pay you that additional amount and from where? If the mutual fund asset manager has to do it, asset manager will go bankrupt. So no, it doesn't work like that. In fact, for anything that goes into exchange traded futures, underlying gold is there to, somebody has to buy gold to secure it. So anybody who sells you these futures has an arrangement with somebody who's holding equivalent amount of gold in case that gold has to be sold. So it's as if when you sell these futures or when you sell these bonds, it's as if you sold that much gold. Now that is the reason, because New York is the world's financial capital. That's the reason, because there is a rush towards gold exchange traded futures, that these companies that store gold to backstop ETFs, they've been buying more gold. They need more gold. And that's why the price of gold in New York in the US today is about $20 more than the price in London. So when you see these stories of queues outside the vaults in London, Bank of London's vaults, where so many countries store their gold because it is supposed to be the safest and also the cheapest in a way, because they've got scale gold storage. You have to pay some rent, just as you pay rent on your locker in the bank. They've been taking that gold out, and you see a lot of the rumor market saying, oh good, people are taking their gold out because the British could have gone and possessed it because UK is going bankrupt. Well, I don't know what's happening with UK's economy, but the reason they are pulling this gold out is that it is fetching them a little more price in New York. Now the price, $20 over $2,900, may not look like too much, but look at the amounts involved and the value of the commodity. That's the reason they are taking this out to New York. And there, a lot of it then is employed to backstop these gold-based exchange traded futures, not just in India, but all over the world. This movement is happening globally, also in the US as well. This gold price had been going up all of last year, and I will give you analytical reasons as we go along. But the fact is that since Trump has come in, it's gone up even higher. Almost every week since he has come in, gold prices ended up higher. It's already more than 9.5, at some point even 10% higher within a month of his having been sworn in. Why is that happening? That's because he's causing so much commotion. So I have for you an article by Leslie Hook and Ian Smith of Financial Times, who say that gold has now become the best Trump trade. What does a Trump trade mean? Because people thought that when Trump comes to power, many things will change. Nobody thought this will be a normal presidency or normal transition. People thought that some of the things will go up. So one of the things that will go up, people thought, will be gold, because he will throw tariffs at countries that can slow down trade, that can slow down the economies, and also tariffs mean higher prices. If you're buying this watch, for example, right? This watch may be available for price X, but if your country is putting 20% tariff on this, then it will be X plus 20%. So tariffs or customs duties, taxes mean increase in prices or inflation. So the idea was that Trump comes in, he will throw tariffs at everybody, trade will be in a crisis, global economic growth will slow down, inflation will go up, so gold will rise in price. That was one thing. Gold was always seen to be a Trump trade, but the other things that were seen as Trump trades were higher increased treasury bill yields, increased yields on American Treasury because inflation will go up there. Interest rates will go up on American bonds. Third, that Bitcoin will go up. The fact is that all three have backfired. All three have bombed. So the idea that there will be strong dollar, idea that Bitcoin will go up, and idea that there will be higher yields on US Treasury, they've all bombed. US Treasury actually did go up after Trump came in. It went up to 4.8%, but it has now settled down to 4.48%. The basic principle, however, is why is then gold holding out? Gold is holding out because the principle with gold is that when trade contracts, gold rises. Because what do people do? If I'm not trading, I have money, right? I have resources. I have to keep them somewhere. Plus, I don't know where currency rates are going because Trump is now causing so much volatility in currency markets. And we have seen this from recent experience that when trade contracts, gold rises. And this came to a pass during COVID. Trade contracted globally and gold rose. Similarly, global financial crisis 2008-9, trade contracted and gold rose. So gold is where you run to when you are fearful, when you are afraid, So it's a bit like you hear the air raid siren, right? What do? When you hear the air raid siren, either you go into the trench that you've been told to dig by your civil defense, or if you live in Israel, country which frequently faces these, you go to your underground shelter or basement which has been strengthened and which has some food and some water and some first aid stuff kept there in case there is bombing or a missile attack, etc., etc. Gold is a bit like that. So gold is that bunker. You go there for safety. I will give you a quote from Warren Buffett. Warren Buffett says that gold is favored by those who fear other assets. So I don't know what will happen to my equity. Stock markets are collapsing and we don't know what Trump will do tomorrow. What will happen to other commodities? I don't know what Trump will do tomorrow and how countries will put tariffs on each other, right? Similarly, I don't know what will happen with inflation. If inflation goes up, the value of my fixed deposits, value of my bonds, my interest income may not match up to inflation. So where do I go? In that panic or fear, I go to gold. So the exact quote from Warren Buffett, gold is favored by those who fear other assets. Ranks of the fearful will expand. That is precisely what's happening right now. In fact, if you look at the global central banks, they underline this most strongly, much more than any individuals. I gave you the figures on purchases by the Chinese Central Bank, Turkish Central Bank, and RRBI since 2022. There is a survey by Invesco Asset Management that tells you that of the 51 central bankers they surveyed, not one said they were going to cut their share of the gold reserves. They were sticking with it. 37% of those, that is more than one third of those, said that they are going to further increase their gold assets. And 56% of all central bankers see gold as a protective against weaponization of reserves. That's a very important point because that's a reaction to what the Western world, particularly NATO and America, did to Putin's or Russia's reserves after he invaded Ukraine, because that was made a part of the sanctions. In fact, some little bit of the concern about gold reserves being held by other countries, sovereign countries in London, has also come from the fact that UK government has refused to give to the government of Venezuela the reserves, gold reserves that they are holding in London's vaults, by saying that the Maduro government is not a legitimate government. It's not a government they recognize. So they can't give Venezuela's gold to a government there that they do not recognize. So all of these have led to many concerns. And when you have such concerns, why take chances? The fact is that RBI itself, which had more than 200 tons of gold stored in these London vaults over the past year, has brought these back in special aircraft, insured, etc. And the simple explanation that the RBI governor then Shaktikanta Das gave was, don't read anything more into this. It's just that we now have the capacity to store this in India, so why store it overseas? I have brought it back. Now, why does gold go up? Gold goes up, first of all, I told you, it's a Trump trade. So there is a quote from Nikki Shields that I see in Financial Times. Nikki Shields was analyst at MKS PAMP, which is a gold refining company, big gold refining company. And Nikki Shields says, gold is a Trump tariff trade. There is a positive correlation between tariff headlines and gold moving. That means Tariff means inflation will go up, trade will come down, so gold will go up. Now, essentially, there are 4 reasons why people and nations buy gold. One, it's a geopolitical hedge. Now, the geopolitical situation in the world is actually up in the air because Trump, within 30 days, has turned everything inside out. You don't know who's an ally, who's an enemy. He's eyeing on territory from a NATO ally, that is Greenland, for example. He wants the Panama Canal. He wants to take over Gaza, right, which even the Israelis can't give to him. At the same time, he puts duties on the Chinese, but he also wants to negotiate with the Chinese. He's negotiating with Putin. He's basically throwing Zelensky under the bus or pretending to right now. So nobody quite knows where the world is heading. In that geopolitical uncertainty, gold becomes the ideal hedge. Second, it's an inflation hedge. So if you think inflation is going to go up, gold will not be hit by inflation. In any case, if everything goes up, gold will go up also. So gold will be an inflation hedge. Those two exist everywhere. Third, it's a dollar hedge. So if you think dollar is going to weaken, right, then do you really want to keep your reserves or your spare money in dollar? Because the value of that may go down. Because ultimately, you will assess that value in terms of what that dollar or what that money can buy. So shouldn't you convert your dollar into the gold? So that is the third reason. The first two apply right now. Dollar has weakened a little bit since Trump came, but not that much. Although from what I read from analysts, he would like the dollar to weaken a lot more. In fact, I will also share with you a column by Gillian Tett in the Financial Times, who says that Trump has this impossible situation or very challenging situation, which makes the unimaginable also imaginable. He wants dollar to be weak and yet keep its preeminence or dominance, because without dollar's strength or dollar's dominance, there cannot be an American military domination. The two are intertwined. At the same time, it wants dollar to be weaker because even J.D. Vance, while speaking to the Congress last year, had said that American dollar is much too overpriced, and because it is so overpriced, it is hollowing out American industry, particularly manufacturing industry, because when your currency is so strong, then your exports become uncompetitive to that extent. In fact, that's been the dispute between the US and China for a very long time, because the US is accusing the Chinese of not letting their currency strengthen. They say the Chinese keep their currency artificially weaker. Now, you might say, "Phir India mein kya hua? Hamara dimag ulta hai kya? That we are actually spending from our reserves to keep our currency stronger." But that is a currency nationalism nonsense that I've talked about in the past. Let's not go there right now. Right now, the first, gold is a geopolitical hedge. Second, it's an inflation hedge. Third, it's a dollar hedge. And drawing from all these, central banks start buying this. And because central banks start buying this, for the same reason, gold prices further start going up, because if the central banks are buying more than 1,000 tons every year of physical gold, 3 years running, and they are not slowing down. In fact, if you see RBI, that buying spree continues, and that is true of all central banks led by the Chinese. They are the champions. You can see that they want to reduce the American share or the dollar share of their reserves as rapidly as possible. All of these are now creating this perfect situation for gold to rise. And I see this line from this Financial Times article, concluding line that says, and I quote, "Clearly the market is telling you that there is only one secure currency in the world, and it is gold." Now I see some nutcase ideas that are going on. Read this article by Gillian Tett. This is not Gillian Tett's nutcase idea. This is the idea that the columnist is talking about that's floating in the American system. Because the American Secretary of Treasury now is a former hedge fund boss, Scott Bessent. Scott Bessent has been talking about monetizing the asset side of the US balance sheet. What does it mean now? This is challenging for me because accountancy is a technical thing. Asset side means what assets are you holding, what are your liabilities. So if you are a company, an individual, a country most of all, how much are your assets that you have and how much are your liabilities, which will be in terms of the debt that you have given out to people, right? In America's case, America's debt to GDP ratio is already 123%, which is very, very high. If dollar wasn't the reserve currency of the world and they could, and if they didn't have the power to keep on printing it, that was a country bankrupt a long time ago. So what is the plan? The plan is a nutty one, but the plan is that US Fed owns so much gold. You've seen in many of these meet the presses or press conferences, or when Trump talks to the press at White House, he's talked about Fort Knox. Fort Knox is where the Americans store their gold reserves. And he's been saying, oh, we need to go to Fort Knox to see how much do we really have. The real fact between the lines is that that gold is still valued at $42 per ounce. It's today in the market about $2,900 per ounce. So the Americans haven't revalued it. I presume that this must have been the price. If you see this chart from World Gold Council beginning in 1970, when the price of gold was about $35 or thereabouts per ounce. So this must have come, $42 must have been somewhere around the time that the gold standard for these currencies was given up. So it is still reckoned in that value. So suppose you revalue it. If you revalue it, you suddenly have $800 billion more on your asset side. Then you can do interesting things on your liability side, because then you don't look so broke. However, this is a mechanical thing. Nobody's going to be fooled by this. Besant has been talking about monetizing the asset side of the US balance sheet. But as I said, this is a mechanical deleveraging. It's a bit like, suppose you think of the house in which you live and you say, look, the loans on me are 5 crores, right? Money I have in the bank, mutual funds, etc., is only 4 crores. That means net I owe 1 crore to the world, right? So I need to deleverage myself. बहुत टेंशन है कि मेरे ऊपर लोन ज्यादा है, मेरे assets कम है. Something happens to me, how will my children repay? Then you say, wow, but my house in which I live and my children live, that is worth 10 crores. So I will add that. That's my asset. So now I have 14 crores of assets or only 5 crore of debt. So that's notional. Are you then going to move out of your house and sell your house? So just as you are not moving out of your house and sell your house to balance your accounts or to fix your balance sheet or deleverage your balance sheet, a country like the US is not going to sell that gold. It can revalue it, but it cannot sell that gold. So it's not going to work like that. It will be therefore a mechanical reset, a mechanical deleveraging of the balance sheets. But some of these ideas are floating, and if these ideas are put into effect, that will cause further instability, because what will then happen? This, in combination of tariffs going up, tariffs will make gold stronger, because tariffs will lead to more inflation. Now, I see also in this column a line that says gold is likely to be the new pivot Trump is trying to engineer. And that's why everybody is getting more interested in gold, because ultimately nobody can take your gold away, and gold will always find value. And the worse the global situation is, the faster the gold will grow. Or if suddenly we have a most perfect world, it might go down 1%, 2%, 5%, but it will not collapse. That is the reason there is a global rush to gold, and that global rush has also now been joined in by individual investors. I see in the same column a line that from an analyst that says, there is no surprise that gold is outperforming Bitcoin right now, nor that traders are flying gold to New York from London vaults. We've come to a financial Alice in Wonderland where buying bullion seems almost sane. Once again, in conclusion, because we had used that example in the very beginning, central banks buying more gold, there is a very telling point. In 1970, central banks globally, central banks in the world had 40% of their assets in gold. That was the era of the gold standard for currency, 40% of their assets. By 2008, it had come to 6% of their assets. Now it's already reached 11%. As we know, RBI is a little over 11%. That is what explains this rush to gold and these rising gold prices.